Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and I'll be breaking down today's market price action. Quite a day in the markets. It's a Tuesday, April the 8th. Let's get into it. As always, we'll be taking a look at broader market analysis, taking a look at what's really moving the markets, taking a look at news, and most importantly, taking a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Before we jump into the market analysis, just a quick PSA. Again, I know most of the spots are filled, but there's still a few left. So if you are still interested, just let us know or get that book soon because we are getting closer to the date here, April 26th and 27th in Las Vegas. All right, let's get into the markets. So jumping into the markets, news of the day, well, it was a wild day in the markets, wild swings in the equities. And at the end, we closed at the lows of the day. So if you look at this chart here, you'll see we had almost a 5% range. We were up like 4.5% early in the day. So we went from an extreme risk-on environment to an extreme sort of a risk-off environment. And this is the kind of volatility that you really need to watch out for because, it doesn't matter you're right, doesn't matter your things, your analysis can turn upside down intraday. So this is where broader markets are in control. And we see what the equity markets do. And based on that, we establish where the risk-on and risk-off sentiment is. And then you look at the correlation, and right now those correlation with currencies are spot on. So as we saw this huge turn in the markets, we also saw a huge turn in some of the currencies like Aussie, or the Kiwi. They were sitting at some pretty handsome gains early in the day, which then turned into a bit of a loser for the day. So again, we are seeing this extreme volatility, big ranges overall. Now, taking a look at what really caused this. Well, early in the day, like I said, markets were in a better mood. They're trying to recover after that 3-day of a rout that we saw in the markets. And then we also got some news that markets are, they're imposing additional tariffs against China. So, that caused a bit of an escalation. As you've seen, this is not a resolution, but an escalation. And I kind of find that interesting that, how it was all about Canada and Mexico, and suddenly that shifted. And I was actually kind of looking for, watching out for it. Said, the last time in first term of Donald Trump, we had a bit of a trade war against China. So there was a lot of movement in Australian dollar and around China. Now we are seeing all this trade war has turned against China. So this is something we got to watch out for, especially as we go into overnight where China might be, coming out with a response. Is that response going to be way worse or is it going to be better? We'll find out. But this is where you got to prepare for the market volatility. And right now, volatility is rising again. Now, if you look at the percentage move, and you'll see we went from, I can't believe just a week ago, where markets were kind of moving in a small fashion. And now suddenly you're seeing movements that, you haven't seen for years. For a lot of traders, this is like the first time where you're seeing things move 2-3% easily intraday. And that's the kind of environment that we are in. Here we are. Swiss franc continues to act as a safe haven currency. We continue to see yen acting as a safe haven currency, and dollar is not taking part in as a safe haven currency. At the same time, dollar's not really falling apart. So you just got to keep that in mind is that, these are still safe haven currency, baskets. And again, right now we are seeing more of that activity in the Swiss franc and the yen. But again, we've seen this sort of a turn where sometimes, the yen backs off and dollars start to take a turn. But you want to continue trading with the macro events. And if this is a risk-off environment, you don't want to be You don't want to be shorting the dollar or shorting anything else. Now, where is the biggest pain? You can see it's not in the European currencies. Euro and pound kind of holding in there. The Canadian dollar, like I said, is not the big topic of discussion anymore. So, we are seeing all that limelight kind of went away from CAD, and it's now into the Australian dollar because that's where you see the tightest correlation. We also have Kiwi kind of just trailing behind the Aussie. And we also have the Kiwi rate statement tonight. So that'll be something we're going to see if that comes in line with expectation, or do they even go an extra step and even cut more? Who knows? We'll find out. But that's really where the pain is, especially in the Australian dollar. So if you are trying to play the Australian dollar, just realize that you are playing that market risk on or risk off sentiment. And as this intraday things reverses, that's where your trade can really turn upside down. So, these are the times where, depending on your scheduling, depending on your timeline, you want to be aware and maybe avoid that if you're not really ready for those kind of swings. Now, this is where we are in the equity markets. As you can see, we went from 4.5% up to S&P down 1.5%. So that's a 6% move. World Stock Index down, cryptos are down. Gold, you can see, is not even the best place to be. And then we are seeing the oil markets down once again. So, big moves that we are seeing across the board. Now, here we are with the crypto, and, I must say crypto is, kind of holding it a lot better. It's not a bloodbath in the crypto, but at the same time, not the right place to park your money. This is all about flight towards safety. And, the cryptos are not really, act as a safe haven sort of a cryptocurrency. Now, here we are with the market outlook. And if you look at the charts, this is a clear -3. We are below the 20, below the 50, and we're getting these big, huge percentage candles. At the same time, we are seeing volatility that's also at some pretty high elevated levels. So combining these two creates a very dangerous sort of a market environment. We can see big reversals, big falls, and that's just that's where you can, if you kind of are caught up on the wrong side, if you're not using the right stop management, this is where you can easily lose your account. And this is one of the reasons I recommend using extreme caution when you are met with this perfect storm where you are seeing big percentage moves and you're seeing big volatility. Now, let's take a look at 24 hours as far as the news event goes. And remember, this is something I talked about before. When you have such a movement in the broader markets, the markets tend to sort of overlook these news events. We saw that on Friday where we had a very, better than expected jobs report out of the US. And you would expect, that would create some rally, or no, it created maybe some short-term movements, but market kind of went in the same way as it was moving. So we have this RBA rate statement, again, like I said, RBNZ rate statement. As you can see, they're expecting cut rates by 25 basis points. If they come in line with expectation, Kiwi's already down. I don't expect those big fireworks. Let's say if they come out and maybe come more. Now that's where the Kiwi's not really pricing in that kind of move. So maybe that's where we can see more of the movement. So we'll be taking a look at the Kiwi currency pairs. Outside of that, you can see it's not a whole lot. We're not really going to pay attention to the FOMC meeting minutes or none of that. Right now, there's more pressing topics in the markets. So let's just do our currency analysis and get into some intraday charts.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
And looking at some intraday charts, like I said, this is the kind of roller coaster that you're going to see in the markets. That we went from risk on to risk off. As you take a look at some currencies, here's the Australian dollar currency basket. Again, you get up in the morning, say everything looked good. Markets are making a bit of a base, wants to break out, and then boom, big rollover. So, like I said, this is where you want to use that correlation. If you really put things side by side and put the equity markets on one side and you put, let's say, the Australian dollar on one side, you will see that correlation where, go back to, let's take a look at the Australian dollar on the right hand side, and then, look at that chart. Look how similar that chart looks. And this is where, if you want to see some things that are leading it, that's the equity market that's kind of leading it. Now, let's take a look at some of the pressing things. Now, with this, drop in markets, where do we go from here? Well, you can see that this was not a good candle. We did try to bottom out right here. We talk about some capitulation. This is not really setting up as some capitulation. A lot of times, we look at some, I think last year was a good example, 2024, where in the equity markets, we saw that big drop. We saw this big drop in August of last year. As you can see that this was a pretty wild move as well. This lasted for 1, 2, 3, 4, 5 days. And then after that, once the dust settled, there were some big moves. I'm not saying this is the same thing's going to happen, but we are in kind of this, big fall, big of that. But this time around, it's just not the carry trade unwind, which was the reason last time. This time is a lot more about this tariffs, this economic policies, this is what's going to weigh down the markets. If we see some resolution, can we see big rallies? Absolutely. But this is where I think we're seeing a much more prolonged event. This is not just a one-time thing. We are seeing escalation. As this escalation continues, we will continue to see these volatility in the markets. Now, how's the bond markets doing? Well, you can see that bond markets are also sort of going wild as well. So there's a lot of movement. Doesn't matter where you look. It's the same thing. There's no real place to hide. Here's the European markets. Here's the Hong Kong markets. This is a global event. It's just not isolated to the US. Now, when we take a look at currencies, and let's just say, where do we expect, this thing to go? You can see that. As far as the trend goes, yen is acting as a nice safe haven currency, and this is likely to continue as long as the market stays choppy. Now, if the market reverses, well, guess what's going to happen? We're going to see exactly what we saw over here, big reversals. Yen had a big reversal. We actually had Swiss franc had a big candle here. But as long as this volatility continues, it doesn't matter how overbought or oversold the chart looks, it can continue going higher. Take a look at this chart on the Swiss franc. On daily chart, you can see we were sideways for the longest time. And look at this move. So this is, again, just reflecting. It's a reflection of what we're seeing in the broader markets. Last year, you can see we had a pretty crazy move and with a pretty crazy wick. So we are not really seeing a big, we saw a wick yesterday, but then that got reversed today. So again, like I said, markets are not out of the woods yet. This is where it might be a better idea to kind of sit on the sideline, let things figure out, and then let the dust settle before you can jump on. Now, like I said, Australian dollar really is at the extreme risk here with this China's retaliation and the escalation. So this is, again, very tied up to the equity, to the broader market sentiment. And right now, there's just no end in sight. When I go out in time frame, you can see that we are getting to some previous levels that we saw around the COVID time. So this is what we call more like a free fall. Now, the next currency that we can focus on tonight is the Kiwi. So where does the Kiwi at? You can see that Kiwi had a nice little break off of that support, and this thing continues to look weak. This is a 4-hour chart, and I must say that this thing, it looks like it wants to break lower, and maybe the next catalyst for this would be the RBNZ statement. you can see that this is again dealing with pretty quite wide range. So until this range figure out, and this is the thing, you want to see sort of a confirmed breakout if it's going to go down. But at the same time, like I said, it's just not about like what's the catalyst for this, and the broader markets are still the catalyst. Risk on or risk off is still a major catalyst. Now let's look at things that are sort of insulated from this crazy volatility. CAD. I mean, remember how volatile CAD was back in February when all this trade war was going on and tariffs on and off was going on. And look at where it is now. We're seeing some volatility, but overall, it's looking a lot better. So again, look for stability. Look for stability and avoid things that are going to be too volatile. So I think that's where Aussie and Kiwi is. Now CAD holding steady, but like I said, in the shorter term, momentum was not really there. But on the longer term, this look a lot better than it did, a month ago. The British pound, you can see, is pretty choppy. This thing looks kind of weak to me as well. This thing has kind of lost its momentum right here, this moving average. So at this point, I no longer like the pound on the upside. But right now, you can see that these are not what I call the weakest currencies. So they're kind of moving back and forth. Where Aussie, something like an Aussie, is more like it's more like a free fall. So pound, euro, like they are going to be, underperforming when markets are better. Like just like last night, if you take a look at how the euro was moving, all night, but as the markets were rallying and Aussie was rallying, well, euro was down, pound was down. So again, those are the places you can hunt. But again, that is going to be dependent on what the broader market do. So that's really where we are. I mean, we can go through a bunch of charts, but when we talk about market volatility and is this the right time to be active? Like I said, right now, this is not everyone's cup of tea, especially if you are less experienced in these markets and this volatility. Another thing I want to show you is, this percentage change. You're dealing with movements right now, like I said, that you haven't really seen for years. I'm just going to use Aussie as an example. And I'm actually taking a look at currency basket, not just the Aussie dollar. Here's the Aussie basket on a daily chart. Now let's go back in time. So these are at the bottom, our daily percentage change. So it kind of tells you how much it really moves on a day-to-day basis. As you can see, these are like measured moves. Now we are seeing crazy moves. As I go back in time, you can see this move is almost surpassing this 2020 move. And this is where you kind of give you an idea that this is even more severe as what we were kind of seeing right here. Percentage-wise, I mean, this thing is a lot worse. So we have come down quite fast. And if you really look back in time, I mean, this is where you can kind of go back test and see, how could you have traded that markets? But, this is where, go back in time over here, there was some capitulation before it really turns around. So, this is where we are. We are still in that little free fall. Capitulation is not there yet. So we probably have see a little bit more pain ahead before things get better. But like I said, like next 24 hours, keep a close eye on the news. See if the China, if there's any news out of China. I mean, the tariffs are supposed to go into effect over midnight. So let's see if we can see some activity in the Asian markets. So just to summarize here, watching for that China's response overnight in the Asian markets. And that's something going to be, driving some moves. Expect a lot more volatility in the next 24 hours, depending on how things come out. Do we see a de-escalation or do we even see a further escalation? Who knows? Again, like I said, this is a market environment where, it's a good time to, if you want to get some experience, jump on your demo account. Good way to sort of, get some experience without really risking your money here. If you're not comfortable, stay out. Let the dust settle before you want to get back into it. Wait for the volatility to start to die down or start to see, some developments in the markets. In the grand scheme of things, in the high side of things, this is a very short blip. we are on fourth day into this, and that's not even a long period of time. So, capital preservation is the most important thing, especially when you're dealing with these kind of market environments. You want to stay in the game to catch the move when they do come. Thanks for joining. If you have any questions, let me know. Till then, take care. Happy trading.